The U.S. housing market is at a crossroads in 2024, with potential homebuyers wondering whether now is a good time to take the plunge into homeownership. Rising mortgage rates, a shortage of affordable homes, and a complex economic landscape make this a critical decision for many. The current market forces both first-time buyers and seasoned investors to weigh the pros and cons carefully. In this video, we will take a deep dive into the factors influencing the real estate market, explore whether buying a home in 2024 makes financial sense, and provide key tips for navigating the market. By the end, you'll have a clear understanding of the current housing environment and whether homeownership is a smart choice for you right now. Market trends in 2024. The U.S. real estate market in 2024 is marked by both volatility and opportunity. Following a period of rapid appreciation during the pandemic, the market has started to cool, but high prices still dominate in many areas. National home prices have declined slightly from their peaks in 2021 and 2022, but this correction is uneven across regions. Factors such as rising interest rates, inflation, and a constrained housing supply have slowed transactions, making it harder for many buyers to afford homes. The national median home price sits at around $410,000 in early 2024, a slight decrease from the heights seen in the past few years. However, prices remain high in many metro areas such as San Francisco, New York, and Los Angeles, where the housing supply is more limited. One of the biggest challenges for buyers right now is the increased mortgage interest rate, hovering between 7% and 8% on a 30-year fixed mortgage. This increase has significantly impacted affordability, pushing some buyers out of the market or forcing them to settle for less expensive homes. The real estate market differs greatly across regions. Cities in the Midwest and South tend to offer more affordable options, while coastal cities and major metropolitan areas still see higher demand, fewer listings, and higher price points. For instance, cities like Austin, Texas, and Miami, Florida, continue to attract buyers due to their growing economies, job opportunities, and favorable tax environments. Meanwhile, San Francisco, Seattle, and other tech-heavy cities have seen a slowdown in price appreciation, driven by layoffs in the tech sector and the high cost of living. Understanding these regional trends can help buyers make informed decisions, particularly if they are considering relocating or investing in real estate in different areas of the country. Several key factors are influencing the current U.S. housing market, and understanding these can help you determine if now is the right time to buy a home. One of the most significant changes affecting the 2024 real estate market is the rise in mortgage rates. The Federal Reserve's efforts to combat inflation have resulted in higher interest rates across the board. While this has slowed price growth and demand, it has also made financing a home more expensive. Rates had dropped to historical lows during the pandemic, bottoming out at around 3%. As of 2024, rates have more than doubled, averaging 7% for a 30-year fixed mortgage. Higher mortgage rates translate directly into higher monthly payments, reducing the buying power of many prospective homeowners. For example, a $400,000 mortgage at 3% would result in a monthly payment of approximately $1,686, but at 7%, the monthly payment jumps to over $2,600. Inflation continues to impact the overall economy, raising the cost of living and eroding purchasing power. For potential buyers, this means grappling with higher costs, not just for homes but for everyday expenses, making it harder to save for down payments and closing costs. However, inflation can also make real estate an attractive hedge. As the cost of goods and services rises, property values tend to follow suit, making homeownership a potential long-term safeguard against inflationary pressures. A major issue plaguing the housing market is the lack of inventory. There is a significant shortage of homes available for sale, especially affordable entry-level homes. This scarcity is driven by several factors. Rising costs for materials and labor have slowed new home construction. Builders are cautious about overbuilding in an uncertain economic environment which limits supply. Many current homeowners are reluctant to sell and give up their low mortgage rates secured during the pandemic, further reducing available inventory. This tight inventory keeps competition high in many markets, driving up prices and reducing the number of affordable homes. The job market remains relatively strong in 2024, with unemployment rates at historic lows. However, certain sectors, particularly technology and finance, have experienced layoffs, which may affect regional markets that rely heavily on those industries. Consumer confidence is also mixed. While many are optimistic about the long-term economic recovery, concerns about inflation, rising interest rates, and potential recession risks have made some buyers hesitant to enter the housing market. Despite the challenges, there are still compelling reasons to consider buying a home in 2024. One of the most significant advantages of homeownership is the ability to build equity over time. Instead of paying rent, where your money essentially disappears each month, buying a home allows you to invest in an asset that can appreciate in value. Homeownership comes with several tax advantages, including the mortgage interest deduction and property tax deductions, which can reduce your taxable income and lower your tax burden. Historically, real estate has proven to be a reliable long-term investment. Over time, home values tend to increase, particularly in desirable locations. Owning a home can provide financial stability, especially in retirement when your mortgage is paid off and you no longer have significant housing expenses. Real estate can serve as a hedge against inflation. As the cost of living increases, so do home values, meaning your investment in a home is likely to retain or grow its value even in an inflationary environment. Additionally, locking in a fixed mortgage rate means that your monthly housing payments remain stable even as rents and other costs rise. While there are several advantages to buying a home, potential downsides should also be considered, especially in the current market. Even though prices have cooled slightly from their pandemic peaks, they remain historically high in many regions. This makes it difficult for first-time homebuyers to afford a home, particularly in high-demand areas. The rise in interest rates is perhaps the most significant challenge for buyers in 2024. Higher rates can add hundreds, if not thousands of dollars to your monthly mortgage payment, significantly affecting your budget. Purchasing a home requires a significant financial commitment, and for some, it may not be the best use of their money. With high interest rates and potential uncertainty in the real estate market, some investors may find better returns in the stock market or other investment vehicles. In light of the current market conditions, some potential buyers may consider renting as an alternative to purchasing a home. The decision between renting and buying comes down to personal circumstances and financial goals. While home prices are high, so are rents in many parts of the country. For some, renting may seem like the only viable option, especially in high-cost urban areas where buying a home is out of reach. However, rents have also been rising steadily, particularly in desirable cities and neighborhoods. Renting offers more flexibility than owning a home. If you're unsure about your long-term plans, renting allows you to move more easily and avoid the costs and responsibilities of homeownership, such as maintenance and repairs. Renters who choose not to buy can invest the money they would have spent on a down payment and monthly mortgage payments into other assets, such as stocks, bonds, or retirement accounts, potentially yielding higher returns over time. For those who are determined to buy a home in 2024, here are some essential tips to consider. Before purchasing a home, it's crucial to take a deep dive into your finances. Make sure you have a stable income, a healthy credit score, and enough savings for a down payment, closing costs, and emergency expenses. Given the uncertainty in the market, some buyers may choose to wait for interest rates to stabilize or for home prices to fall further. However, timing the market can be tricky, and waiting too long may mean missing out on a desirable home. Your credit score plays a vital role in determining the interest rate you'll qualify for. A higher credit score can save you thousands of dollars over the life of your mortgage. Additionally, exploring different mortgage options, such as adjustable rate mortgages, may help lower your initial monthly payments. Deciding whether to buy a home in 2024 is a personal choice that depends on your financial situation, goals, and the region you're considering. The market presents both challenges and opportunities. High prices and mortgage rates can be daunting, but real estate remains a stable long-term investment. If you have the financial resources, are planning to stay in one place for several years, and want to build equity, it could still be a smart decision to buy a home this year. However, if you're unsure about your job security, think that rates might drop soon, or are concerned about short-term market volatility, waiting might be the better option. The key is to thoroughly evaluate your financial health, research your local market, and make an informed decision based on your circumstances. No matter what you decide, the U.S. real estate market in 2024 remains dynamic and full of possibilities for those who are prepared. Don't forget to like and share this video for more financial tips and advice.